Welcome to the How to Trade Like a Pro podcast. I'm Wieland Arlt, and in this episode, I meet Indrawijaya Rangkuti from Jakarta, Indonesia, and we are talking about, of course, trading and how to make big money with compounding. Before we go into detail, please take a closer look at the risk disclaimer in the show notes, and now we are ready to go. I'm here together with Indrawijaya Rangkuti. Indrawijaya is private trader, retail trader, as we call it in general, and member of the board of the International Federation of Technical Analysts of the IFTA. So therefore, he's a dear colleague of mine, and I'm happy, Indra, to be with you here in this interview, that you have taken some time just to talk with me about trading. So first of all, Indra, welcome to the podcast.
Thank you. My pleasure having you today, Wieland. It's my pleasure.
Excellent. And you're from Jakarta, from Indonesia. And apart from trading, this is a great country. I really love it. So we have seen us several times there, and we had great fun. And also, what I have seen in Indonesia, people are quite crazy about trading. So, like you are as well. Let's talk about your very beginning. So how did it started? How did you become a trader?
Okay. The idea happened on 2009. I was in Washington, D.C. at that time, Virginia, correctly. Yeah. And then there was a conference in Chicago at that time, 2009, IFTA conference. And then there were three delegations from Indonesia. It was Gideon and late Muhammad Yusuf, and also Saidu. And then they came to my place, right? Because my landlord, who is my friend, is the best friend of Saidu. And then after that, I saw them, how they shopping, how they spend money is like crazy. And then I was like, wow, what were they doing for living? And then my friend, which is the landlord, said, hey, Indra, go work like them. So what are they doing? They're a stock trader, they're a commodity trader, and they're a forex trader. All right. Then I tried to Google it around my area to learn about the stock and commodities. When I see the price for 3 days, it doesn't make sense for me. It's quite expensive. And then I go back to Indonesia, right? Back to Indonesia, and then I started to apply to get a job in Indonesia, because I didn't back home. It's like 5 years, and then I don't know why I accepted in the commodities broker, and then when I started there, they teach me about the knowledge about the trading. So in my mindset, okay, this one is free and I got paid. I don't have to pay like when I was in the US to learn about trading. Mm-hmm. And then I start to invest my own money, because I know we can get the money from the market. Just we don't know how we can get it. But after 3 months, I studied, then I put my money on. And then I got lucky, right? My first position, that one was making like 10% profit in 3 months, right? And then, but that's the problem. When you study and learn about trading, when you do your first trading, you making profit and you didn't evaluate it, that become a huge problem for you. Why? Because in trading or in the life, there is word saying beginner luck. The beginner luck is the biggest problem. Why? When you got luck, but the method you did wrong, then you put that as your benchmark for analysis and trading. if you didn't evaluate it. But if you did, then you can get conclusion. But if you didn't, that become a huge problem for you. That's the beginner luck. And then I got the beginner luck at that time.
Right.
I got the beginner luck at that time. Yeah. And then the money just poof, gone in 6 months. And then I want to quit. At that time, I got an offer job in Qatar, but not in the financial industry. But my manager told me, when you lose money in the market, you have to get back your money back from the market. So at that time, I tried to be patient, and I learned some stuff. And I had a mentor. I think he's a Singaporean guy, but he worked in the branch in Kalimantan. But he read the chart. So from that time, I put myself as a trader. Why? Because I'm not really good in the marketing. I'm not really good in sales to sell to sell something to people to invest, because I know the risk very high, and I have to be honest. Every time a client asks me, so what is the risk? I said, all your money gone. And then after that, I learned. And after 2.5 years at that company, I moved to another company. And then I got a client, which is work for the government. And then that was great, because the experience that I have in my first company, every new employee in my team, I'm the one who teach them how to read the chart. So the benefit is, if we have a student, the benefit is sometimes the question is you never think about it, but they ask, then you can see the blind spot that you never seen. That's the benefit when you have a student. And then more question. And then I see like they put investment 10,000 in the company. So I see the pattern. Every time the money draw down until 30%, they come to me. They came to me. Can you help me with this? Can you help me with this? I said, the transaction is on your decision, not my decision. But I know you're a good trader. Can you help me? So 1, 2, 3, more than 10 people came to me and asked me a favor for 1 year. So I see the pattern. When the money goes 30%, then they have problem with their psychology.
Yeah.
So I create a system. So make your virtual account, start trading from 30,000. Okay. So we'll see how you can survive in 1 week.
Yeah.
All right. And another problem from the trader that is very common is, when you have small profit, you're going to take it.
Yeah.
But when you have big loss, you're going to hold it. Right?
Yeah.
True. So that things become my theory. I switch the things. When you lose small, you cut loss. When you profit big, you hold. So I switch the mindset. So how we can do that? How I can do that? I become a contrarian trader. So
what does this mean?
I'm a contrarian. So it means when the price go up, I'm gonna sell. When the price go down, I'm gonna buy. And then people say to me, okay, Indra, how about if you buy at the bottom, after that the price go down? I said, no problem. Why? I put my cut loss. So if it go down, the risk is limited, but the potential gain is huge.
True.
Then that's the money management. The money management is the soul of the trading.
Yeah.
The technique is the variable of investment. And then my superior came to me, Indra, we're gonna meet client, all right? Can you make just from one paper, like in the insurance company, the client want to invest with us? All right, I'm making the formula, just one paper, and that paper until today become my risk management for trading. Why? Why? Because we're dealing with the probability, not certainty. We're dealing with the probability.
Yeah, true.
So from that 3,000, I create a trading system management, so that 3,000 can raise up until 117,000 in 2 weeks.
Great.
So the technique is that's the compounding system.
Yeah. All right. Hold on a second. You give me so much information right now that I really want to dive deeper into some parts of what you just mentioned. So first of all, your development and your very first beginning was just because you met some other guys from Indonesia being quite generous in spending. Let's keep it like this way.
Yes.
And of course, I mean, this is what a lot of people experience. They see people living good, enjoying life, and they also ask themselves, okay, how can I do this? So what are they doing? I mean, if you go to Facebook or YouTube or TikTok, basically it's TikTok, you see people asking celebrities, hey, what are you doing for a living? You know, and this is very interesting.
Yeah.
And this is something as a trader, you can also become a trader. Everybody can become a trader if you're serious about it. This is something what I also learned now from you. It's like, yeah, of course, you had beginner's luck. And with beginner's luck comes, the need to reflect yourself and to question yourself, what am I doing anyway here? Is this the right thing or the wrong thing, right? So is it beginner's luck? If so, it will not hold forever. If it's not beginner's luck, but skills, all right, I can build upon this, right? So this is what I learned here from you as well. And then you said you started small, means you started with $3,000, right?
Yes, that's because of the money that people came to me when their investment already wiped out. So normally when they came to me is 3,000 normally.
Yeah. So and then something it's very important what you said. And because there's a lot of misconceptions in the markets with this, and also people, especially coming from Europe, a lot of people they discuss about entry strategy. Can I define, totally change settings of this or that indicator, oscillator, whatever? They're looking for anything new to put in their charts. The next holy grail, the next fashion sexy thing to use in order to have to make better decisions. But what I hear from you is you don't need it, right? You need, of course, some kind of strategy, which is reasonable. Okay, fair enough. But it's more about what you said, psychology and management, right?
Yes.
So, and it couldn't be a huge difference to what most people think. I mean, as professionals, yes, we know you're right. All of us know after all these years, because we tried every strategy more or less. We have thought so many thoughts about it, but still, it's psychology, management, risk management, mindset, everything around that. And I love to discuss this with you, because whatever entry you take, whatever management you take, still your mindset is so important, right?
Yes, we're dealing with the certainty, not we're dealing with the probability, not certainty.
Yeah, true. So probability.
Another mindset. This is what I always ask to my client. Let's say you're my client, Wieland. Let's say you're my client. So how much you want to invest with me?
3,000.
How much?
3,000.
3,000. Okay.
Yeah, like everybody does right now.
No, I have a story. I have a story with 3,000.
All
right. Okay. So you ready you want to invest with me 3,000. Okay.
Yeah.
Another question is, how much you willing to lose your money?
Let's say 1,000. 30%.
All right. So you're willing to lose 1,000. So if you lose 1,000, you don't get mad at me, right?
No.
Okay. Now we manage your 1,000. Keep your another 2,000 in your pocket and put the 1,000 with me, and then I manage your risk.
Right.
So from 1,000, I try to generate your money. Let's say 3% per month. It's not a promise, but 3%. The 3% that I give to you is from 3,000, not from 1,000.
Okay.
So the 3,000 is the initial margin. You're willing to lose 1,000. So you put the money to me 1,000, but I try to give you 3% from your initial margin, from 3,000. So I'm making money 3% from 3,000 with capital 1,000. That's how I manage my client.
Yeah. All right.
So that's the mindset.
Yeah.
So from 1,000, I'll calculate, right? I'll calculate how with the risk management. I'll calculate the probability that the money can be finished, can be gone, right? So let's say from 1,000, I put the risk 3%. I put 3%. So means from 1,000, I can have chance 30 times. Am I right? 30 times. Yeah. So the reward that I aiming is 5%. 5%, 3%. So when my trading probability 30 times, I got 50-50. So 3% from 50% is 15 times. So 15 times 3%. So I'm going to lose like 45%. But from 5%, 15, so 75. So I'm still gaining like 45%. So that's the easiest way for me to making money from the market. Yeah. So this is a probability.
Yeah.
So that's how. After
and
you.
So this means that you let's stick with 1,000. So 1% of 1,000 is, what is it?
$10.
Yeah.
That's 3%.
It's $30. Yeah.
$30.
So it's not much money. And if you say I want to go back with 5%, it's coming back with 50. I mean, it all needs to be, in somehow in some relation together, right? So 1,000 risk, I have my account of 3,000, 1,000 risk in total, but it doesn't mean that I'm willing to lose that money in one trade. I mean, this is very important to understand, because if you lose leverage, it's easy to go with that and say, okay, I'm going to have this as risk, but then you have like 30% risk and that's 3%, right? So just to make this really, really clear, that it's just the amount you're working with, and the other one is just for buying and selling, to get into the position, right? So 3,000 to 1,000. So this means you have like $30 as risk and $50 as
reward,
as profit target, as reward. So this, and if I get it right, this is where you exit. So you target for 5% and exit, no matter what, right?
Yes, it is.
All right. Okay.
Or I can double it when I do compounding strategy. Yeah. I can make more than that. That's why we could make like 3,000% in 1 month, in 1 week, in 2 weeks, if you know how to compound.
Yeah, because
I don't teach this. I don't teach this for the beginner.
No, but that's exactly the point. I mean, honestly, for the listener, for the listener, you helped me with the translation to Bahasa of my book Risk and Money Management, where also it's the money management metrics. By the way, thanks again. I'm very, very grateful and thankful for that. But you also know then my money management metrics, you know, where we talk about risk reward ratio, hit rate, and of course, trading frequency. So, and putting this into connection, you can easily just do some calculation about what do I have to put into account in order to get something back. So is it
That's
something
why
for your calculation?
When you ask me to translate your book to Bahasa Indonesia, I see some similarity of my system.
Yeah, of course. Yeah. Because, and this is something we also have to mention here. It's not rocket science we're talking about, right? So there is not that hidden secret. It's, you need to be clever a bit, for sure. I mean, in life, it's better to be a little bit intelligent, a little bit streetwise, a little bit clever. But at least everybody can do this. Everybody can rethink and question himself. Am I doing the right thing? And doing also some basic calculations. This is very important also for everybody to understand. We're not inventing the wheel a second time, right?
Yes. That's what I say to you. The money management is the soul of the investment, right? The technique of the trading, the mother of technique is intermarket analysis. The other things is the variable of investment, like TA is a variable. Yeah. Fundamental is variable. But to be good fund manager, you have to know the knowledge of intermarket analysis. Why? So you can put any kind of asset moving around, which one bearish, which one bullish, which one starting to decline, which one starting to rising.
Right.
But again, even though you're a good fund manager, know how to do intermarket analysis. The money management is the soul of the investment.
Yeah. And this is also, I mean, it sounds so simple. Yeah, you give 3 in order to take 5 as a risk and a profit, and then you're going consequent. And also, it's like risk reward ratio of not really 2, let's say 1 to 1.678, maybe 1.75. What do I know? You know, so it's not really like you're aiming for the moon. It's just having solid profits on a regular basis, right?
Yeah, on regular basis.
Yeah. And
another thing.
Yeah, that's the secret of it, right? That's the secret sauce.
And another thing, you know when the great time to enter.
Yeah.
The great time to enter is not in the Asian market. It's in the European opening market.
Yeah.
I mean, in the commodity or in the forex trading.
Yeah.
So why I say that? Normally, the volatility is there. If you want to make great money, you have to enter in the great volatility. If you enter in the small volatility, so you only can earn small of money. Mm-hmm. That's not a secret. That's not the holy grail. It's there. It's there. You have to see it.
Yeah. True. I mean, especially if you're trading forex, you're with the European market, European Open, you have London coming in, you have Europe total coming in. And then if you wait for like the afternoon hours when the Americas coming in as well, you have worldwide, except Asia, of course. But, you know, you have the biggest nations, the biggest trading centers of the world coming together at one time, you know. And then, of course, you have at least the opportunity for having quite a huge volatility to get your points.
Yes, that was my presentation on 2020 when I became a speaker in the IFTA conference. I was talking about that. So normally in London market or Europe market, minimum you have like 50% movement of the volatility of the instrument or the security range.
Yeah, and then also if you go over to the US markets, it's the same again. So you have at least 2 times a day from the European perspective, 2 times a day, you have the opportunity, you have high volatility. And this is pretty fair, pretty nice. But on the other hand, if you go over to the Asian session, if you look for the futures and also for Forex, it's not that volatile, but it's going easy up and down. It's no panic, it's like, it's smooth range trading most of the time. I feel like, when I look at the futures, it's smooth, easy going, some points and pips up, some points and pips down. So you can also easily pocket some points and some profits once in a while on a regular basis too, right?
Yes, it is.
And I like to return a little bit to your management, because honestly speaking, this is really, people are keen to know, how are you doing this? How do you really come to 3,000% profit within 2 weeks? I mean, everybody wants to have this, honestly, me included, right? So how do you do this, right? So, okay, you have 3% risk, 5% profit, but this will not give you 3,000%, not at all. So what is the secret sauce here?
The secret sauce, this one is like it's like a Google, right? When you see a Google box searching engine,
yeah,
it's very simple, but the algorithm is very difficult.
True.
So I'm a WD Gann trader.
Mm-hmm.
WD Gann is a William Delbert Gann.
Mm-hmm.
Right? So I'm a Gann trader. So I learned about the cycle, and then about the timing. So normally I got at the peak or at the bottom. So why I can match that big amount of money, because I enter the money when the market is turning.
Mm-hmm.
When they go up, I sell. When they go down, I buy. And then, so the people will say, oh, okay, you're making a lot of money from that because you got at the peak or at the bottom. That's number 2. But number 1 reason is the risk is limited. Okay, this one I got influence from Sun Tzu.
Mm-hmm.
Sun Tzu, right?
Sun Tzu. Okay.
You know Sun Tzu, the Art of War?
Yeah.
Book, the Art of War. Okay.
Yeah.
It's written in there, when they attack a village, they will not bring any kind of food, right? So it's not become heavy for them to carry on. So that's the risk management I carry on. So this one is limited. How I can make 3% become 5%. So I'm willing to losing 3% to gaining 5%. So fair enough. And then before I learned WD Gann, I got influence from Alexander Elder, triple screen, triple screen method. So triple screen method is like a war as well, right? Why is like a war? Because the bigger time frame you see, the bigger map you see. The bigger time frame you see. So if you see a map, it's like this.
Yeah.
And then you narrow it down from weekly, daily, 8 hours, 4 hours. So from there, you can squeeze it, the range of the market movement. So when you see the bigger time frames, you see the direction, right? You see the direction. So when we see the direction up, it's very easy. Just go buy. If you see the direction go down, you just sell. Don't do the opposite. You will kill yourself after that.
Yeah.
So that's the method. And then WD Gann have a technique. It's called compounding, right? After you're making another sell or another buy, and then the price go up, and then do some correction, you add another position to buy, and in the opposite, when you do sell, the price go down, and there's do some correction, and then you sell again. So why I believe that? So I know the cycle. Which one is the big cycle? Which one the short cycle? Okay. The thing that helping me is the divergence. Divergence, according to Dr. Alexander Eller, is the strongest signal is divergence. And I believe that. Yeah. But not much people know the right divergence. I learned about this, right? So when I have a joke with the breakout trader, they say I prefer to break out. Then I told them I don't mind do breakout trading, but for the breakout people, when you enter, that's your first position. But for me, that is additional position. So that's the thing. And another thing, I'm a person who like to study and learn many knowledge. Then I went to London. I met Andre Pancoli. Maybe you heard about him, right? He's from the Federation Study of Cycle, and then he teach me some knowledge. Then the knowledge that he teach me, and then I compared to another theory. Then I met the elitician. I said, when you say first wave, for me, the C wave is the first wave. The last wave is the first wave. Why is that? Because Ralph Nelson Elliott is an accountant. So basically, when you do inventory theory, the current theory was from previous. The current inventory was the previous inventory. So again, I combine how I can create that big amount of money. First, I know when the market wants to turning. Why? The risk is limited. And then when I get the big cycle, I just follow the trend. But when they do some correction, I did some additional position. Of course, I did extra sizing for that. Because why? Because from the first position, I already gained some cash, even though I haven't liquidated, but I have extra capital, so I can manage it. And after that, I did trailing stop. So when I got wiped, I don't do cut loss. I did cut profit.
True.
So that's the mindset, not cut loss, but cut profit. Cut profit.
Yeah.
So I think when you put everything in your mindset, everything will be easy. Like, with trading, the basic word is trade. Trade is buy and sell, right? When you're creating something in the food industry, when nobody come, so the money you have to waste it, right? You have to throw. So that one become cost.
Yeah.
So in any kind of business, food industry, equipment or everything, they have a cost over there. They have a damage cost. So similar like trading, when you miss analysis, that become a waste cost.
Yeah.
So I have to be afraid. And like Abraham Lincoln said, the best investment is knowledge. It will give you a great interest, right? That's what Abraham Lincoln said.
And he is so right with this. So Indra, just to sum it up. So basically what you do, you have 3 and 5. Okay, we discussed this and we have this in mind. And then whenever you have a correction of a move, so you're following the big picture, like primary trend, according to Charles Henry Dow, long-term trend, and then you go into this direction, right? And with every correction, you build up a new position. So basically what you're doing is building a pyramid, right?
Pyramiding. Yes, pyramiding.
So, and also what we also always have to take into account, and you this is what you also said, you don't cut loss, you cut profits. This means, in general, the last position you add to the pyramid will be a loser by definition, right? Because somehow, someday, the trend will be over and will reverse, and the last position will be a loser because it will be the last position and most likely being stopped out with a loss. But all the other ones are huge profits. And the first one, of course, best and the biggest, and the other ones getting smaller, smaller, smaller. And also what we need to take into account is also, I'm pretty sure what you do, that it's for us important that the risk stays the same, right? So that still with every trade in total, you just risk your 3%, but still you have like added up 10 or whatever, but still it's like a risk of 3% of the total position.
Yes.
Am I right? Yeah.
Yes, you're right. You're right. But let's say like this. When I mention 5%, it's normally on the middle of the trend. But when the beginning of the trend, so I see the end of the market heading to. Let's say the price is here. I know they're gonna end up in here, and this range is huge. So when I enter, I didn't put my reward. I leave it like that. Just leave it like that, because I know it's gonna go in this area. But I have a game. The game is on pyramiding. So when the price go down, let's say I'm already gaining 10%. So I did trailing stop. My cut loss from 3%, I decrease it into 5% profit.
Yeah.
Right. So when the market turning back up, so I'm still gaining 5%. It says stop loss, but in general, it's stop profit. I'm making money. But like you said before, the last position will be cut. My position, it will be cut loss. And on that moment, from the rest of this profit, this position become a profit. And when they cut that last my position, I know the game is over. So it's time to relax.
Yeah. So, of course, and this explains quite a lot how you can make in such a short-term time quite a huge profit. And just imagine, and of course, people tend to be greedy, right? Just imagine you would do this all over again. It's mindset matter, right? And psychology, you do it all over again, and then you just let's say, okay, I'm going in with 3,000, going with 30,000, 300,000, and once in a while I will become a billionaire. Of course, it's not possible.
Yeah. And another thing, Wieland, making big profit is easier than making consistent profit.
Let's just sink in, like Elon Musk would say.
Yeah.
So yeah.
Let's say like what I propose. If I never chasing a client, right? But some people, they came to me, they want to invest money to me. Then I said to them, how many days in a month? 20 days, working days, right? So how much money you have, and then how much you expected. So let's say from 20 times trading from 20 days, let's say once a day they trade, right? So they have 20 trade a month. Let's say they're losing 10 times, they make a profit 10 times. So they're still making 50%, right? More than that, 3% from 10 times is 30.
Yeah.
Right? So they're still making 20%. So making 20% from investment is very great, not good, but it's great, because like in Indonesia, the interest from the bank is only 4% per year. So per month is only 0 point something.
Yeah.
So that's what if they ask me to manage their fund, that's what I told them. So that's the most important thing from money management, like the title of your book.
Yeah, true. And I found a lot of things. And again, it's not that these are basic concepts. I have written about basic concepts and put a little bit thoughts from the other side, from my personal view into it, same like you did. And at the end, it's always very interesting. At the end, we're still always doing the same, more or less, with a little bit spice from here, a little bit twist from there, right? But at the end, we're doing the same, right? And that's also what really interesting. What I feel like is really interesting. The more I talk about trading, for example, in my German podcast, I have right now interview number 100, right? So many insights from other traders. And what turns out that we all do more or less the same, coming from different sides, different ideas, of course, but still entering the market more or less at the same time, having some kind of same management. But, and this is also very important for every trader out there, if we all do the same, technically, but still we have people losing big, and still we have people winning big. The only thing that is different must be the mindset, right?
Yes, it is.
There's no other solution, no other way.
Yeah. When you say trading, you trade, buy and sell. So
Right.
there's a waste cost over there. There's a damage cost.
Yeah.
And another thing, Will, when I approached the late our chairman, Muhammad Yusuf, when I want to know about WD GAN knowledge, there's one question he asked me. And I think this question is reasonable and connected to all people. Why? The question is, you want to learn about this? What purpose do you want to use this knowledge?
Yeah.
Let's say TA knowledge. For analysis or for trading? Because these things, analysis and trading, is different implementation.
True.
It's different. When you doing analysis, yeah, it's just like from here to there, right?
Right.
But if you're talking about trading, there's a ripple in there. There's a wave over there. Then this ripple, the movement, the one who shake your psychology.
Yeah.
Oh, it's going down, but still go up. Oh, it's going down again, but it's going up. That's the difference. So in trading, since you have to have a mindset, you have to have a mentality as well.
Mhm.
But the mentality is built by mindset. Why? The mindset say this one go there. You just have to know where to put the right position with limited risk.
Yeah.
That's the quote, limited risk.
Yeah. Totally agree. And of course, yes, we need some techniques. Yes, we need our setups. Yes, we need strategies.
Yes.
We need to know why markets move. We need to know how a trend unfolds, and all this. This is basic requirements. I mean, definitely we need to learn something. It's not just only mindset. It's knowledge, but
Yeah.
it's quite, it's not that much. Right? It's easy to apply. It's easy to understand. It's not so complicated. Again, it's not rocket science.
Yeah, it's not rocket. But it's one unity. The technique, the system.
Yeah.
But the core is the mindset. The core is the mindset.
Yeah, totally agree. Crazy, right?
Yes, simple, simple, but that's the reality.
Yeah, it is. Totally agree. I totally agree. And yeah, after all these interviews and discussions with other traders, I had never heard anything else. And somehow there needs to be something behind it, right? So obviously. Cool.
Anyway, I'm at the moment I'm doing my journal. Hopefully, it can be MFTA or probably a book, but I don't know if I want to publish it or not.
Yeah.
The title is Simplified the Concept of the Law of Vibration and Tunnel Through the Air, which is applied in all modern markets, commodities, stock, currency, and crypto, as long as I have a chart.
What's your advice for a total novice trader, somebody who really want to enter the markets for the very first time? What is the most important thing to start with? What do you think? What do you suggest?
For sure, the knowledge.
Right.
Knowledge you must have. And the mindset that they must have it. This business is probability, not certainty. And then after you set your mindset, you have to put how much the money you're willing to losing it, not to investing it, but how much money you're willing to losing it. Then after that, you manage that risk, become a profit.
Then you're good to go from $3,000 to, what was it, $150,000, $170,000, something like that. Yeah, let's say 3,000% profit. Excellent, Indra. Thank you so much for all the insight. And I'm pretty sure everybody who listens right now feels like, okay, I'm gonna check this out. I'm gonna compound. I'm gonna build a pyramid. And yeah, if you do so, of course, always take care of risk management. First, cut loss. Second, cut profit. So this is basically the most important advice. And I'm happy that you shared this one with us. Again, thank you so much, Indra. Here, and see you soon. That's already it. And I really hope that you enjoyed this episode and you took away some learnings for your personal trading. If you want to learn more about me, about my interview partners, if you want to have a one-on-one coaching or even get into a training course with me or my interview partners, just get into the show notes and follow one of all these links you find there. And then I will be happy to hear and see you again. Your Wieland Arlt.